Hello, traders. FS Speculator here. Today is Wednesday, and it is January 29th. So, how is everybody today? Been quite a while since I have live streamed. I always take about 4 weeks off for the Christmas holidays and the Thanksgiving week holidays. So, really, I don't think I've live streamed since before Thanksgiving. So, welcome to my live stream. We're here today because we are going to have federal funds rate news coming out at 7 p.m. tonight. So this is definitely normally a really big news event for sure. I mean, I would expect to see a lot of volatility out of this news event. So at 7 p.m., which is just under 30 minutes from now, we have federal funds rate news. They are not planning on lowering interest rates as of yet. They say that they're not going to be lowering interest rates at this current time, at least. I think this news comes out roughly every 6 weeks, so maybe at the next interest rate news they'll think about lowering rates. But right now, at least the forecast is no interest rate reduction. Now, I think this is going to be kind of an important event because Trump definitely, the new president, President Trump, definitely wants interest rates down, and he definitely wants the U.S. dollar to go down, according to what he's been saying. Now, they're not planning on lowering interest rates this news event that's coming out pretty shortly. So I'm not really sure if that's Powell's way of kind of sticking it to Trump a little bit because Trump did say that if he could, he probably would fire Powell. So I don't know. It's kind of funny. I don't know. Something's definitely going on there for sure. So anyways, yeah, so we have interest rate coming out shortly. I don't think they're gonna change interest rate. If they do actually change interest rate, then that's when we're probably gonna get a big giant move in the market. Normally if the news comes out different than what they forecast, which they're forecasting no change. So if the news comes out that they do change it, 25 points one way or the other, then that's when the market is probably likely to make a big giant move. So we need to keep an eye out for those big moves, that's for sure. We are definitely waiting for a big turn on the dollar. So I always like to start off with the dollar index. Let's go all the way up to the monthly time frame since we do have about 25, 26 minutes or so until the news comes out. So the US dollar for me is the most important analysis if you're talking about any of the US dollar pairs, except for maybe gold. Gold is definitely its own little beast, kind of does whatever gold wants to do. So I always start off with the US dollar. And the US dollar to me, I feel like it's been making such an extremely clear pattern over these last year or so. It seems so extremely clear that it almost makes me wonder if it's actually a false pattern. Sometimes when you see an extremely clear early way pattern, it's actually a false pattern. It's kind of like the market trying to trick people. So this first impulsive move down definitely looks like a wave A. Then we definitely have one, two, three waves up right here. I think this is a three-way pattern up. I think this is a three-way pattern down. And then I think this move up right here is an impulsive move up. So I think that's a 3-3-5 pattern. If you actually throw your Fibonacci levels on here, you will realize that this so far as of right now is definitely fitting the characteristics of a regular flat. A 3-3-5 pattern would be the regular flat for the wave B. So wave A, wave B, and then I would expect this to turn down for a big old giant wave C, which this wave C would be probably roughly the size of this wave A projected off the top of this wave B right here. So I am definitely expecting to see a pretty good push down. The question is whether it's going to start now or whether it's going to go up more. It possibly could turn into an expanding flat. That's why I have this little box up here, because that would be my target for an expanding flat. This could potentially end up going up like that, hitting these 78 or 168% Fibonacci levels and making an expanding flat wave B and then turning down. And if that is the case, that means it's probably not even going to turn down this year. But I think as of right now, I'm definitely going to stick to the analysis that this is likely to turn down at some point, whether it's today or whether it's sometime later this year for a big wave C of this ABC correction. So if we expect the US dollar to go down at some point, then we would definitely have to expect the euro dollar to make a big move up at some point. We'd have to expect the pound, the Aussie, and the Kiwi to make a big move up at some point. We would probably, yeah, so we would expect that, and then we would probably expect the US dollar CAD and the US dollar Swiss to make a big move down at some point. And like I said, gold doesn't really care about the US dollar, even though it is a US dollar pair. Gold doesn't really give a crap what the dollar does. So as we go down to like the daily time frame, You can see that this is all just one trend up right here, and we definitely had an impulsive turn to the downside. And this move down right here to me definitely looks like a trend. So that's why I've been saying that this is likely a wave A or wave one. Now we talked about this pretty exclusively today in my daily Zoom meetings that I do for my premium members. If you are interested, my website is fxpitcollector.com, and you get access to all the benefits listed below for only $30 per month. But we were talking today about alternate possibilities, how this possibly could be a flat right here within this trend. So there is a possibility that this is a one, two, three, four, five, and this is an A, and this is a B, and then this is five waves of C, and it's just a irregular wave B, or possibly an expanding flat, or a contracting triangle type shape. So if that's the case, this potentially would just keep on going up and maybe even go up and break the previous highs. So either way, I either think that this first move down is an A and we're now in a wave B, which will go up to one of these Fibonacci retracement levels and then turn back down for a wave C. Or I think that perhaps this is an expanding ABC correction and this is just going to end up continuing the uptrend. Either way, whether this is a correction like this or whether this is the continuation of the uptrend, I personally would be looking for longs on sort of time frames because the trend is up and we expect to see minimum a correction to these five waves, which I don't really think this little teeny push up that we got right here is a proper correction to these five waves, especially if you think about it on the time scale. There's no way that this correction right here lasted, several weeks, and then this move up, this trend lasted several weeks, and this move up lasted only 2 days. I don't really think that's the case. So now that we did that, we kind of figured out, the longer term view for the US dollar. Then we need to expect the exact same things on the US dollar pairs themselves. And also, by the way, before I do analyze all the US dollar pairs so we can get ready for the news, if you haven't done so already, definitely join my free Discord channel. We currently have 5,700 members in there, and it is 100% free to join. The link for that is in the chat and in the description. You do not ever, ever have to pay a dime in there if you do not want to. I do offer a membership at my website, but it is definitely not mandatory. You can join the free membership and you can stay a free member as long as you like. So definitely check that out. Nothing to lose. It is 100% free to join. So, anyways, yeah, let's take it down to the euro dollar. Now, every single one of these dollar pairs made an uptrend right here. That's what we can see, right? We got one, two, three, four, five waves up. I would expect most likely to see a correction to those five waves, which would be something like that. If we switch real quick on the daily time frame to the pound dollar, we got one, two, three, four, five waves up. If we quickly look at the daily time frame on the Aussie dollar, we got one, two, three, four, five waves up. So if we one more time, if we quickly look at the Kiwi dollar daily, we got one, two, three, four, five waves up. So most likely, unless that continuation of the uptrend scenario that I just told you on the U.S. dollar is true, which it definitely could be, most likely we are in some sort of a correction to the five waves up right now on every single one of the dollar pairs. Even the U.S. dollar CAD is definitely a little bit different, but the trend is still up. And if you look at the US dollar Swiss, the US dollar Swiss also made five waves down. So we are either now in a correction to those five waves, just like I said on the US dollar index, and then we're going to go down again, or we are in the continuation of the uptrend, which both possibilities definitely could be true. Luckily, both possibilities have us looking for longs or potentially holding longs. So let's go to the US dollar. Let's go down to the 1 hour time frame and let's start looking at that. Now, fair warning, I really don't do a whole lot of analysis on the 1 hour time frame. I am a swing trader. The 1 hour time frame for me is nothing but looking for pullback entries. I'm not really trying to count any waves on the shorter time frames. So yeah, hey Nay, how's it going? Hey Young Barry. Scalping the 1 second. There you go. Wow. I could see maybe scalping the 30-second time frame or something. Or the 15-second time frame. So, anyways, how much time do we got? We got 19 minutes. So, anyways, this move down to me is definitely looking like a trend. I really don't think that this move to the upside is complete yet. I don't think that the correction to this move up is complete yet. We got a nice impulsive move up, and we have a correction that looks like a trend that is only going down to the 38%. I think that if anything, this is going to end up doing something like that and going back down and making a more proper correction, or potentially it's just going to continue the downtrend, which, like I said, both possibilities have us looking for shorts. Same thing on the pound dollar. On the pound dollar, I would actually kind of expect it to maybe go up and make a double top because that would be more of a 1, 2, 3, 4, 5 pattern. And then we're probably going to go down. And while the euro dollar is making a wave C, this one's just going to make what is going to look like, in my opinion, a motive wave correction because it's just going to be a downtrend and then it'll probably continue up from there. Because while the euro dollar is making a wave C, this is also going to be making a downtrend, except for this is going to be the completion of the trend with most likely a motor wave correction, I bet. So the Aussie dollar has been making a very strong move to the downside also. I think that there's a very good chance this is going to potentially go up at the news. But then I think there's a very good chance either tonight or tomorrow it's probably going to reverse that back down. And it's going to make more of a proper correction to this move up right here. So, like I said, we're either going to make a correction to these 5 waves up or whatever it is to the upside, or possibly this is going to end up being a complete trend reversal and it just goes right down. So, we'll have to wait and see what it is. Looking at the Kiwi dollar real quickly, we'll just kind of go through real quick. Looking at the Kiwi dollar, same type of thing. We got a downtrend, except for the Kiwi dollar made a very, very beautiful downtrend. Look at that. 1, 2, 3, 4, 5 waves down. Very, very nice downtrends. What should happen now is we should take out that high right there, like that, and then probably back down like that. That's what I think will probably happen. Making a more proper ABC correction, or perhaps maybe a 1, 2, 3 pattern to the downside. That definitely could be possible also. So yeah, anyways, let's see here. Let's go look at the US dollar CAD. So the US dollar CAD is definitely quite a bit different than a lot of the other dollar pairs because of the CAD news that's been going on lately, I think has caused a very different pattern. So what I think is probably going on this is it's probably going to do something similar to what I said on the other ones. It's probably initially going to go down, but then I think it's probably going to end up making another move up, just like I said on the other pairs. So anyways, yeah, let's see here. Let's take it down to the US dollar Swiss. Let me unplug my headphones. I don't. Okay, so I had my headphones charging. So let's see here. I don't even know what that is. So, anyways, gold. Gold is a lot different than the most of the other dollar pairs, as usual, because gold does whatever gold wants to do. I also feel like gold is making a very, very clear pattern because it looks a very, very impulsive down. It looks like a wave A. It still looks to me like impulsive up. It looks like 3 waves down, and it looks like impulsive up. So, to me, it totally looks like an ABC of B, big time. And we are currently at the 100% Fibonacci extension of wave A. This right here is what I believe is the wave A. This right here is what I believe is 3 waves down for wave B. And we got our Fibonacci extension measuring the wave A, projecting it off the bottom of a wave B. More than likely, this move up right here is a wave C of wave B. And more than likely, this is eventually going to end up turning down for a nice 5 wave pattern to the downside, which most likely will be very similar to the size of this move down right here, probably 100% of this move down. So we're looking at potentially about 2,500 pips to the downside if that is correct. Most likely taking out these highs, these lows right there, and maybe even making a run for these lows. So the problem with this is we don't really know 100% that it's over yet because it has not been able to break and hold below structure. And I definitely do see a possibility, especially with a few of my other members mentioning this. I think Power Plan was mentioning that this is definitely possibly a 1, 2, 3, 4, and then possibly it goes up and makes a wave 5. So yeah, hey Luca, how's it going? Nice to see you. Thanks, buddy. So I think if anything, this could possibly pop up again. I was kind of hoping it was already over because it definitely made an engulfing move down, definitely made a little bit of a break, but it might end up going back up and making a wave 5 before it actually does end up turning to the downside in a bigger way. Boy, it definitely looks like it wants to go up on these sort of time frames, doesn't it? So I was thinking that the euro dollar, pound dollar, Aussie dollar, Kiwi dollar would probably pop up a little bit. So Probably a good chance this is going to go up too because the dollar's going to be driving this temporarily. So there probably is a pretty good chance that is going to end up going up, in my opinion. And like I said, if it's a wave five, it probably will go up and take out the previous highs before it actually does end up going back down. Most likely something along those lines. So yeah, we got about 13 minutes until the news comes out. Like I said, the federal funds news comes out at 7 p.m. UK time. I'm in the same time zone as the UK, but I'm not in the UK. So that's what this is. This is 2 o'clock in the afternoon Eastern Standard Time. So yeah, we got federal funds rate coming out in about 13 minutes, and then we have the press conference at 7:30 p.m., which is 30 minutes after the news comes out. A lot of the times you'll get a first reaction at this first news event. You know, the market will make a big move, and then while it's waiting for the press conference, a lot of times they will pull back. So almost always it comes all the way back to the starting line before the news even came out. And then normally during the press conference, especially during the Q&A part of the press conference, that is normally when the market will decide on which direction it wants to go to or whether it really is going to end up moving that much in the first place. If they don't change interest rate, it may not be a big giant mover today. If it comes out at 4.5, it may possibly not move the market that much. But we're just gonna have to wait and see. I'm hoping that they do lower it a little bit more to 25 basis points because then it would be a surprise to the market. And if it's a surprise to the market, that's when we are probably going to get a pretty decent move. So, even though we really only got time to look at the dollar pairs, once the news is over, we're going to have about 30 minutes of downtime waiting for the press conference. And that's when I'm going to take requests from people. So, if anybody has something they want me to look at outside of the dollar pairs, because we're going to look at the dollar pairs again before the press conference or during the press conference, so after the news comes out, we'll have about 30 minutes to take requests from the audience. Let me know if you want me to analyze something for you. I'll look at anything and give you my opinion on what I think is going on. And then once we have the press conference, we'll watch that all together. It starts at 2:30 Eastern Standard Time or 7:30 UK Greenwich Mountain Time. And we'll watch that. We'll take a look at the dollar pairs and see what's going on. So, hey, Skywick, how's everybody doing? Yeah, definitely. I'll be more than happy to look at anything you guys want once the news comes out. So, this news is definitely going to affect other currencies also. I mean, that's something you kind of got to keep in mind. The yen is a risk on, risk off currency. So, if the dollar goes up, normally the yen will go down. The yen currency itself, not the yen pairs. And then if the dollar goes down, the yen will go up. Now, the same thing kind of applies to some of these other pairs too. The Swiss is not as much of a safe haven as it used to be, but the Swiss pairs are also a risk on, risk off currency. And then the Aussie and the Kiwi also seems to be a pretty big risk on, risk off currency nowadays. So this news, if it's a big mover, probably will affect the yen pairs. It probably will affect the Aussie Kiwi pairs, and it probably will affect the Swiss pairs, and it probably will affect the stock market. So definitely keep an eye on the stock market too. We had a big dump in the stock market this week, as I'm sure everybody has been hearing about. That deep sink or whatever it is, the Chinese AI, which I really don't know much about. So, anyways, we got about 10 minutes until the news comes out. Hey, Philip, how's it going? How's everybody doing today? Let's see here. So, yeah, like I said, definitely don't forget to join my Discord channel. It is 100% free to join. You never do have to pay a penny. 100% free to join. If you would like to join my membership, then definitely check it out. I do offer a lot in my membership. I could like to call it learn and earn at the same time because hopefully while you learn the trade by following along with my trading course, attending my live Zoom meetings that I do 4 times a week, every Tuesday, Wednesday, Thursday, and Friday. I do live Zoom meetings that usually last around 2 hours. I also do say every single trade I take, and all my trades are basically swing trades, by the way, with my members at the exact time of entry right here. And it is only $30 a month. It's very, very cheap. So if you want to check that out, it's fxpercollector.com. So check that out. Yeah, I saw that. Um, DeepSeek possibly did some sort of data breach or something. I saw that too. Yeah, there's a lot of drama going on with that stuff right now. That's going to be a pretty high topic of news, I think, for a while, by the sounds of it. Am I on the not on the right thing here? December 18th. Wow, I'm not even close to the right date, am I? So we're gonna have to find the right press conference, obviously. January 29th. There we go. That's better. December 18th. Yeah, that definitely wasn't the right one. So, all right. Well, we got about 8 minutes until news comes out. Silver is a U.S. dollar pair. So I can take a look at that real quick, just because it is a U.S. dollar pair. Do I not even have it on this list? Palladium, platinum, silver. There we go. Should be somewhat similar to gold in some ways. I haven't looked at this in a long time, but first thing that stands out to me is this right here. One, two, three, four, 5 waves up. Yeah, definitely. So to me, it looks like 5 waves up. And normally, if you see 5 waves, a lot of times you do get a pullback that will take out the previous structure. So that is a big clue right there for me, hopefully. Oh yeah, I think this is possibly maybe not, but one, two, three, four, five. You think that could be a wave A, and then this is a breakup for the A? This we've been seeing a lot of these expanding type crescents lately. One, two, three, four, five of C. This is a running crescent if that's the case. And then potentially down to take out this structure, probably to the 61% for wave C. While the gold is going down, you would expect this to go down also. A lot of my analysis on this is kind of coming from gold, honestly, because I think gold at some point is going to turn down for at least a few weeks, and that means that this would probably turn down for a few weeks also, which means it probably would take out the wave four structure of this last uptrend, probably something like this. 61%, $26.10. That'd be my forecast. So yeah, once the news comes out, I will definitely, once the smoke clears a little bit, we'll start looking at some other stuff. And then we will go back to the dollar pairs for the press conference. It's going to be interesting, unless they don't change interest rates. Then it could possibly be a little bit boring, but we'll see. 5 minutes and counting, so 5 minute clock is coming up. Yeah, I know. We need to watch this on the 1 minute time frame. Is that giving us any clues? Sometimes those very short time frames can give you some clues, like minutes before the news comes out about what's going to happen. I'm really not a big fan of the short time frames myself, but mm, yeah, I was predicting up on the euro dollar initially, and that would make sense, I think. Something like that. And spike reversal, porcupine pattern. Hopefully that's what it is. The old porcupine comes out. Yeah, that was definitely. Mm, yeah, I don't know about that. I would expect down on that also, really. This one too, really. Maybe one, two, three, four, five. That's an A. This is a B. It goes down. I mean, it goes up and then down like this. That would make sense, I think. Hmm. Kiwi dollar, yeah, definitely would make sense on the Kiwi dollar. Up, down. It might potentially go up a lot higher than that, though. Yeah, I can't watch these 1 minute time frames. Maybe once the news comes out, we can watch it on a short time frame. Because the euro dollar should take out this high if it's going to make a crescent to these 5 waves. So it should potentially go up and take out these highs. And then if it really is going to go down, it's probably going to go down after that. Probably down to at least the 50 to 61%, I would think. Oops. I know these fib levels are hard to see, but I like to keep my chart very clean. So 50 or 61% is right there. So maybe something like this will well, not like that, but like like this will happen. And like I said, this is either a way B or two. or it possibly is a continuation of the downtrend. We spent a lot of time working on this U.S. dollar, these U.S. dollar pairs earlier in the Zoom meeting, and during my daily Zoom meeting that I do for my members. And we came to the conclusion that there's a possibility that this is a big old flat right here. And I do have to give other people credit. Other people saw this before I did. One, two, three, four, 5 ways up. That's why I always say that I love being part of a trading community, because when you're part of a trading community, other people give you ideas, and man, sometimes other people give you ideas and they're exactly right. So wouldn't it make sense for this to spike up, grab some liquidity, and then down it goes, makes a brand new low? It makes a lot of sense on the euro dollar, and it makes a lot of sense on the pound dollar. Some of the other pairs, like the Aussie and stuff, it really doesn't seem like that's the case. 5 ways down for A, B, 5 ways down for C, and then probably something like that for the C. I think the pound dollar is probably going to go up and take out this high. Whether it takes this high out or not, I don't think so, but maybe it will. But if it does take that high out, it's probably only going to be by a few pips. And then I think it's going to possibly go down like that. But then you look at the Aussie dollar doesn't look like that at all, in my opinion. The Aussie dollar looks like this potentially could be a wave one, and this potentially could do something like this and then go up for a wave three. So we'll see. We got a little bit of, lost a little bit of clear correlation between the pairs. Kiwi dollar definitely looks like a perfect uptrend. You would expect it to go up and then down and then up if it's going to do that. Or if this really is some sort of a weird flat and this is really the end of a wave four, then it's potentially just going to keep going down. Like this is a wave three, four, five. But then your wave A would have to be over here on this one. I don't know. That's kind of, I guess it's definitely possible, but A, B, C, a B, and then 5 ways of C. 1, 2, 3, 4, 5 type thing. A, B, C, a B. 1, 2, 3, 4, 5, something like that. Definitely is possible. This right here potentially could be the end of a cut, and this thing could literally just keep going down. Oh, news is about to come out. We got 30 seconds. I gotta zoom back in a little bit. I gotta get my charts open so I can see, because I do trade. I am a trader. I'm in trades right now. It ain't really gonna be time to close anything or get in anything, but once the smoke clears a little bit, potentially we could get some nice trades out of this. 10 seconds until the news comes out. I'd like to see it just dump right down and make new lows, but we'll see. Here we go. 1 second. Ooh, come on. What are you gonna do? Sorry, I'm not watching the news right now. I'm watching my own personal Orlando chart on my second screen here. Not really a whole lot going on. Oh, come on. I'm short on the euro dollar and I'm short on the Aussie dollar, so I'm kind of hoping it just dumps, to be honest with you. But I was definitely thinking it was going to spike up and grab liquidity before it did it, so we'll see. Boy, that's definitely not a very big move so far. It's good for my trading account, but man, I would like to see that thing go down a lot more than that. Come on, baby, go, go, go. I'm also short on gold. I'm short the euro dollar, I'm short gold, and I'm short the Aussie dollar. All swing trades. Every single trade I take, I share with my group at the exact time of entry with stop loss. But keep in mind, every single trade I take is a swing trade. I'm not really necessarily trading the 1 hour time frame. I might go to the 1 hour time frame for entries, but I'm definitely not really trading the 1 hour time frame. So I'm short the euro dollar, I'm short the Aussie dollar, and I'm short gold. Not from today though. I went short right around the break over here somewhere. So on the euro dollar. And the Aussie dollar, same thing, right around the break of the daily low. I went short right around here someplace. Still holding. And I went short on gold. I'm pretty much at break even right now. I went short on gold someplace around here on this little pullback right here. So a little bit of profit on gold. It's pretty much break even though. Yeah, man. All right. Nothing to worry about on my trading account, it looks like. Hold and hope, it looks like, is going to be the strategy. What's the US dollar CAD doing? No, man, not a whole lot. They must have definitely not changed interest rates, huh? Oh, they didn't either. No, 4.5. That's kind of a jab right in the kidney of Trump, if you ask me. I mean, this is just my opinion, but I really feel like Powell is like doing this on purpose because of Trump threatening to fire him. Man, no change in interest rate. But we have the press conference coming out in 30 minutes, and once that press conference comes out, depending on what the Q&A is, we definitely might still see some big moves. Oh man, look at it. It's not really doing much, is it? Wow, you wouldn't even know that it's interest rate news right now if you weren't paying attention to the news calendar. All right, well, I guess we'll start taking requests from the audience here in a second. Yeah, I think he's gonna have to say something about future cuts also. How do I steal something that is openly available? I'm not really sure what you. It does kind of look like gold was gonna go up. I will agree. Yeah, well, anyways, I'll start taking requests from people. I keep up my analysis on pretty much everything on this list. I try to cover every single thing on this list every single day. So I try to keep up on all the pairs on this list. I don't have a whole lot of analysis on the indices, but I do trade them. I'm currently short the stock market too. Not really doing much yet, is it? But that was a big breakdown. I would expect that to at least turn into a correction. But we'll see. A lot of the stock market pairs do look like they could turn. Obviously, that was because of the AI predicament that we've been in these last couple of days. But ooh, there we go. Look at that. It's back up 5%. My God, that thing has been all over the place, huh? I haven't been watching that because I hardly ever look at it. But man, that thing has been all over the place. Yeah, I know. Look at it. Wow, it's probably gonna go back up, isn't it? That's like the fear index. That's how I always learned what that was. So, anyways, yeah, let's see here. Let's see. The Yo Aussie is the next one I see. We definitely will go back to covering the dollar pairs in a little while here. Let's see. The Yo Aussie, man, I'm expecting a turn on this one too, but I'm not sure if it's actually going to come or not. Definitely looks like an AB. That's for sure. It seems like it should go down for a wave C. So this is I really spend most of my time analyzing the weekly, daily, monthly time frame because if you know what to do on the daily, or you know what the direction, primary direction is, then you can pretty much just go to the 1 hour time frame, not try to count anything, and just enter on pullbacks. Um, I personally think that this is a wave three. I think this is a 1, 2, and I think this thing's going to keep going up for a three, potentially even going up and taking out these previous highs. I think we're in the very early stages of a wave three right now. But go down to the weekly and the daily time frame. Definitely looks like 5 waves up. 1, 2, 3, 4, 5 waves up. A break of structure. If this was the 1 hour time frame, I would be calling this my bread and butter trade right here. Break of structure. 1, 2, 3 waves down. Break of structure. Pullback below the break. And then continuation pattern. So I'm thinking there's a good chance that this is going to go down. I got my Fibonacci retracement on the wave A. Definitely looks to me like like 3 waves up for wave B, 78% fib. If this turns and makes like an engulfing move to the downside, especially on these higher time frames, it is likely going to go down, make a wave C, which will probably take out this low right here and then go back up. Hopefully, this is like a wave one, wave two of a bigger subdivision of that wave three. It's probably like a one. A wave one of wave one of wave three, right? One, two, three of wave one of wave one of wave three is what I think we're looking at. Kind of a mouthful, but that's definitely what I think it is. Ooh, it is turning a little bit too. Let's see. I gotta keep an eye out my charts a little bit, see if there's anything happening. Pretty much every single trade I'm in is in profit, except for the U.S. stock market is break even, just below break even, but everything else is in a little bit of profit, so doing pretty good. So yeah, let's see here. Man, that definitely is trying to turn. Need to see a break of structure to confirm the turn, but I mean, there's really no reason not to enter before the break of structure. But you really can't hold on to the trade with confidence until you see the break of structure, which I would say really right here, but maybe right here too. Someplace in this area, I'd want to see it break down. If it breaks down below those two areas and holds, then it is very, very likely going to go down, take out that wave four structure I showed on the daily time frame. So, anyways, if you have something you want me to look at, definitely put it in the chats. I'll be more than happy to look at basically anything. We're going to go back to looking at the dollar pairs in a little while once we get closer to the press conference. I have the press conference queued up, January 29th. I had December 18th queued up a minute ago, but we got it all figured out now. December 29th, January 29th, FOMC. We'll see what Powell has to say. I'm kind of actually, a lot of the times I don't really care what he has to say, but I'm kind of interested this time because I feel like this is kind of I feel like we're in a comedian show right now with everything that's going on across the world with Trump and Elon Musk and AI and everything else. It just seems like a big comedy show. Yeah, let's look at the dollar yen. I never did look at that one. Yeah, I already looked at gold a bunch. I'm short on gold right now. I'm hoping it goes down big structure. Well, we're gonna look at the dollar pairs again once the news comes out. Once the press conference starts, we'll look at the dollar pairs again. I could see multiple possibilities on this US dollar yen, unfortunately. I think that the US dollar index is going to try to go up one more time eventually. So I would kind of expect this to possibly go up one more time too. And it looks very, very corrective, doesn't it? When they first made the impulsive turn, I was pretty convinced that the wave B was over, that it was going to go down for five waves of C. So wave A, wave B, wave C. But boy, wave one should be impulsive, and that definitely doesn't look impulsive on this time frame. You go down to the daily time frame, I mean, it definitely is looking like five waves. So it definitely could be a wave one. It might end up turning up, but it might be a wave two or maybe a wave A, B. I'm kind of hoping it does this for one, two, three is what I'm hoping for, and hoping to get short at the end of this wave two or wave B, possibly. But on the shorter term, I think it's going to go up first. I think it's going to go up and take out the highs of this last five waves down or whatever it is. I think this is the wave one over here. I think this is a one, two, three, four, five. And then it's going to go up. But the move up is going to be a crutch, and then it's going to go down again, is what I'm kind of thinking. Yo, Swiss buy. Ooh, let me see here. That makes me wonder. Maybe. You have to look at that one. So, yeah, I'm kind of thinking we might pop up a little before we go down. But that is mostly because of the US dollar index. I think the US dollar index is also going to pop up a little bit before it goes down. So I would expect that to probably go up and probably take out the high of wave four right there. That looks like a one, two, three, four, five right there. That's why I think this is a wave three and this is a wave four. That's a wave five. This is a one, two, three, four, five type pattern right there, which is why I think it could be a one. And this is just like an irregular wave two. One, two, three, four, five. Because this right here definitely is five waves. I think the trend ends here. And then this is a one, two, three, four, five of one, or one, two, three, four, five of A. Either way, it's the same trading strategy, so it really doesn't matter. So that's what I think about that. Let's go check out some more things. Like I said, if you have a request, put in the chats. I'd be more than happy to look at anything you would like. Let's see here. We got the Yo Swiss. We're gonna go look at gold in a few. I knew that was gonna be a popular pair. Hey, Yo Swiss did turn up. This is a tough count, the Swiss pairs. I think that my original thought, or our original thought in my group, because the Zoom meetings that we do every single day, the main purpose of those meetings is to put our heads together and try to figure out what they're gonna do. I think there's a good chance that this is an A still, or maybe a one, and this is a wave B, and that this is potentially going to keep going up for wave C. So, like I said, some of my analysis I have to give credit to other people because that's one of the great benefits of being in a community of like-minded traders is that you can bounce ideas off each other. I don't know how many times somebody else has told me their count, and I've changed my count to theirs because I was like, oh man, they're definitely right. Are things moving? A little bit, not much. So that is why I really like to be in a community of traders. Bounce ideas off each other. I did go short on your Swiss. I am already short on it from yesterday or the day before or whatever. I'm trying to figure out. I feel like there's a good chance that it is going to go up again now because I think there's a good chance this is going to make a wave C. So this move down that we're currently seeing probably is a correction to the last move up. One, two, three, four, five waves. Fibonacci retracement. This is probably going to end up being a correction to the last five waves up. So I would expect to see some sort of three waves down, in my opinion. Ooh, yeah, look at that. I think that's impulsive down. I think that's going to be an ABC. So probably a wave A, probably a wave B. I think it's going to go down, make a wave C before it goes up. I do agree that it's going to go up at some point, but I'm not really convinced it's going to go up yet. It definitely could, for sure. Natural gas, yeah. Let's go take a look at natural gas. Oh wait, the yen pairs also. Yeah, what are you looking at on that? Just a yen basket, and then we'll look at natural gas. Wow, those yen pairs are not doing anything. It's a correction. A correction. The market is literally only ever doing two things. The market is either trending or it's correcting to a trend. So a correction is a pullback. This is a correction. This is a correction. This is a correction right here. So it's just a pullback within a trend. That could be one of those irregular ABC corrections. One, two, three, four, five. One of these little teeny wave Bs and little teeny wave Cs that I often talk about, which is not even a pattern in the Elliott wave book. This is a pattern my mentor used to always show us because this definitely does happen. Everything works. Maybe with proper risk management, everything works. Even with good risk management, I wouldn't say everything works, but boy, that yen is not doing much of anything. Yen basket, yeah, that hasn't really changed any. I think it's gonna go up a little more looking at this yen basket. Just a little, like one more time probably. Grab the top of this channel. Hey, menu. Maybe something like this. And then maybe we'll get another push down. Yeah, doing pretty good, man. Must be pretty late for you. Geez, let's see, not too bad. Yeah, let's see here. So, yeah, I kind of think that the yen is probably gonna go. It's probably gonna go down a little bit before it goes up, I bet. Wow, the dollar pairs didn't do anything hardly. That's a very underwhelming FOMC, but we got Powell's face coming soon. Anytime Powell even shows his face, the market will go wild. So Yeah, I think the yen pairs need to go down just a little more, but I do agree that they might be getting close to the ABC. That potentially is a 1-2 right there, so oh, that's not too bad. 1 o'clock almost. That's not bad. So let me go look at natural gas real quick. Like I said, we're gonna take this in between time to look at requests. So if anybody does have a request, let me know. Be more than happy to look at basically anything. I can look at crypto, stock market, specific stocks, give my opinion at least. Yeah, I haven't done any analysis on this for a while. Still early for you. Yeah, I know you are. Ooh, I wonder if that possibly could be a 5 waves right there. That does look like a crescent. That does look like 5 waves. I think that natural gas needs to go up a little bit more. It's just a question of how much up. Is it now in an uptrend or is it now in a correction to this move down? Either way, I think it longs would be my primary goal for sure. Oh yeah, definitely. Look at that. That's a wave four, I bet. I would expect this to stretch out more though. I would expect something like this probably. Maybe not quite that big. Let me clear that out. Probably more like this. Because that boy, that looks like a 1-2. And then this looks like a 1-2. 1, 2, 3, 4, 5. 1.5. I wouldn't be surprised. Cat is not doing looking too good these days. You hear it's gonna be the 51st state of America anyway soon, so oh God, I couldn't help it. So I think this is most likely a correction. So I would expect to see some sort of a three-way pattern down to probably a little bit of a deeper pullback. Yeah, I definitely am not seeing too much excitement out of the dollar pairs. Any more requests? And then if not, we'll go back to looking at the dollar pairs, I guess. A little bit of a push up on the dollar yen, starting to push a little bit. Hey, yeah, we'll look at the CAD pairs again. We had Canadian interest rate, gold stock. What's the ticker for that? I don't know what that is. Gold stock is it a mining company, like a gold mining company. I know a lot of people from my old group that invested in gold mining companies, especially in Asia, as like investments. NEM. Okay, yeah, give me a few minutes. I think the U.S. dollar CAD is going up, in my opinion. I do agree with whoever said that the CAD's going up still. A lot of people are forecasting the CAD is going up also. I do think it is a WXY, and I still think it's going to turn down at some point, but I'm not really convinced that it's ready to turn down yet. Definitely not convinced yet of the turn down. Now, if this thing goes down and breaks this structure with momentum, then that's a different story. If it does that and holds, I'm gonna be looking for shorts and for the next probably a few months, honestly. But so far the trend is up, and it probably is gonna go take out the highs on those higher time frames. Yeah, PAL starts in 9 minutes. NEM. NEM. Newport Corporation. No, New Mount. No, I'm sorry, New Mount Corporation. I don't know. This is definitely going to be my opinion. I've never looked at this before. Oh, wow, look at all the gaps. I got first thing I do when I look at something new is I instantly go to the higher typeface. Wow, this is an old company, whatever it is. New Mount. Hmm. It's been around for a long time, whatever it is. First thing for sure is that this is 5 waves up right here. That's like 100%. So that definitely is clear. Oh yeah, I think this is pretty clear actually. Impulsive down, probably wave A. Impulsive up, wave A. Corrective down, that is definitely corrective. That's extremely overlapping. Impulsive up, wave C. So A. Let me change colors to pink so you can see. So A, B, probably eventually down for a C. And then eventually probably back up again. Now that's the monthly time frame. So now let's keep that in mind as we go down to the daily. I would definitely put my Fibonacci retracement on here. And I would expect it to go up a little bit more. I really doubt that that's the end of it. That definitely looks like a 5 wave trend too. Look at that. That's a very nice 5 wave trend right there. So, sometimes it kind of amazes me how some of these things I never even look at have like these perfect patterns. Look at that. That's like a perfect expansion, expanding ABC right there. That's probably an expanding ABC right there too, honestly. That's a running ABC probably. So I bet this is gonna end up doing something like this. Probably to the 38, 50%, something along those lines. And then probably down again. Probably a wave two of wave C, in my opinion. Is the stock market going down or what? I sorted the stock market. When you sort the stock market, you don't want to hold for too long. Maybe a week or something, but the stock market is kind of a buy only territory. you know, you're better off just trying to buy the dips. So we got about 4 minutes until the press conference starts. Pretty underwhelming, but that's okay. Seems like the market kind of changes its mind on what's important and what's not important. And right now, what Trump is up to is probably the most important thing. Ooh, look at that. One of the most important things right now is what Trump is up to. So, and that obviously that AI is pretty important right now too. I think. I don't think I'm gonna go soy. Even though that is a break, I don't think it could possibly be a running ABC. I mean, I've been debating that, and that's why I was almost thinking about going short if it breaks, thinking that it might just keep going down, but it really doesn't seem like that should be right because we have a 5 wave trend up right here on the exact same time frame where we can only see one wave up and one wave down. We should see on the same time frame 5 waves up, just like we saw 5 waves up right here. So I think there's a good chance that's a wave two. Yeah, we're gonna look at gold definitely. I'm short on gold, but I've been short for a couple of days. That looks like it's gonna go up too. Definitely. Look at that. That is definitely a crutch into the uptrend. Look at that. That is almost definitely gonna go up. I bet that's definitely a wave two. I don't think it's moving much. Is it good? I'm short. I love it. I hope that thing goes down to 25.30. I'll be happy. Maybe I'll turn into a gold lover. Probably not though. Yeah, man. Some of these make me think that this is already over, like the Aussie yen. I mean, it took out the high wave four, and that's what it cuts into the last five waves should do. But a lot of that pattern is probably caused by the Aussie. Yeah, I'm gonna have to go back to doing my live streams once in a while because that's when I can look at things that I don't normally look at. Like if I tried to make a video for that NEM that you just asked me to look at, I would probably get like 10 views. Like nobody would watch it. But doing a live stream, I can look at it and it doesn't matter. So, yeah, I'm about to start doing these live streams more often. Let's see. Cat Swiss. Honestly, this one kind of looks like it wants to just keep going down too. So, yeah, menu. I'm loving it. Maybe I'll finally get into the dark side with gold. Ooh, every single thing I'm in except for the Yo Swiss is pretty much break even. Everything's in profit. Nice, 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 nice. Not much profit. The Yo Cat is just barely in profit. The S&P 500 is just now going into profit. Like I said, every single trade I take, I do share with the group at the exact time of entry. That's why I like to call it learn and earn at the same time. It is only $30 a month to get you access to all the benefits that you see listed down here below. We do 4 Zoom meetings a week, and I also do share every single trade I take with the members at the time of entry. Just keep in mind that none of my trades are really short-term trades. I don't really trade the short time frames. I like to hold on to trades for as long as I can. Sometimes only a couple days, sometimes a couple weeks. Like Menu said, if this works out good, maybe we can hold on to it for a month, maybe more. I'm gonna try to hold as long as I can, especially on something like gold where I don't really care about day trading gold anyway. So if I could swing trade gold, I would love swing trading gold. Get in, hold for 4 weeks, 5 weeks, get out, get in again a couple weeks later. That would turn me into a gold lover. But trying to day trade gold on the 15-minute, 1 minute time frames, that's definitely not for me. Let's see here. So yeah, like I said, if anybody wants to check it out, the website's right here. It's fxcollector.com. It is only $30 a month. You can cancel at any time. It comes with a trading course included. 34 video trading course. What is a trend correction, the structure of the market, Fibonacci, Elliott wave videos, tuning the frequency of your charts. Very, very important. Risk management, live by it. Trading psychology, consistently profitable trader, and how much money can you possibly make with trading? The compounding effect. So definitely check that out if you're interested. It is only $30 a month, and it is you can cancel if you're not happy. But I think with the live Zoom meetings and everything else, you'll be pretty happy. I also now have alerts. Oh yeah, the thing's starting. It's just about ready to start. I also do alerts now too, which is kind of an add-on. Which if you really want to get into it, you can for $25 a month, you can get all the alerts that I personally use to take trades. I set it up every single morning, so that way each day you get brand new fresh alerts, and they will literally get sent directly to your cell phone if you sign up for this. You'll get alerts on your cell phone telling you when it's possible time to enter a trade. It is only $24 a month, and you sign up by joining at the service shop. $25 a month doesn't include any of the benefits that you get for being a member. It's kind of like an add-on to the service that they already provide. So definitely check that out. Those alerts are definitely, definitely profitable if you know how to use them 100%. There we go. I'm missing it. It's starting. Can you guys hear that? Oh yeah, the forex sediment too. That's pretty nice too. Can you guys not hear the lunch thing? I just turned it down, but I didn't set it up properly. I don't think before I started the live stream. The subtitles, but nobody wants to read subtitles.
The last 5 years in determining our findings. We intend to wrap up the review by late summer. I would note that the committee's 2% longer run inflation goal will be retained and will not be a focus of the review. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer run inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve. Chairman. Steve Leisman from CNBC. Mr. Chairman, at a event in Davos, or from to Davos anyway, the president said he'll demand that interest rates drop immediately. So I guess I have a three-part question. Has the president done this to you? Has he made that demand? Secondly, what is your response to that? And third, what effect, if anything, if any, does a president making these kind of remarks have on policy? Thank you.
Three questions. I'm seeing it really as one question, though. So I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so. The public should be confident that we will continue to do our work as we always have, focusing on using our tools to achieve our goals and really keeping our heads down and doing our work, and that's how we best serve the public.
Can you just comment on whether he's physically communicated his demand to you?
I've had no contact.
Thank you.
Thanks.
Nick Timmeros, The Wall Street Journal. Chair Powell, you and several of your colleagues said around the time of the last meeting that your policy stance was meaningfully restrictive. Given economic and financial market developments since then, how has your confidence changed in an assessment that says interest rates are meaningfully restrictive?
I don't think that my assessment really has changed. I mean, a couple of things have happened. We've gotten more strong data, but we've also seen rates move up at the long end, which could represent a tightening in financial conditions. I think if we look back over the past year or so, we can see that policy is restrictive. If you look at the effect of high rates on interest-sensitive spending, for example, in housing, and if you look at the achievement of our goal variables, we're seeing the economy move toward 2% inflation and has moved largely to maximum employment. So we literally look at the movement toward the goal variables to make that assessment. Now, policy is meaningfully less restrictive than it was before we began to cut. It's 100 basis points less restrictive, and for that reason, we're going to be focusing on seeing real progress on inflation, or alternatively some weakness in the labor market before we consider making adjustments.
If I could follow up, does the economy here warrant meaningfully restrictive interest rates? And would you judge interest rates to still be meaningfully restrictive if you were to lower them by another quarter point?
So I think our policy stance is very well calibrated, as I mentioned, to balance the achievement of our two goals. We want policy to be restrictive enough to continue to foster further progress toward a 2% inflation goal. At the same time, we don't need to see further weakening in the labor market to achieve that goal, and that's kind of what we've been getting. The labor market has really been broadly stable. The unemployment rate has been broadly stable now for 6 months. Conditions seem to be broadly in balance, and I'd say you look at the last couple of inflation readings and you see we don't overreact to two good readings or two bad readings, but nonetheless the last couple of readings have suggested more positive readings. So I think policy is well positioned.
Colby from the New York Times. Colby Smith with the New York Times. Chair Powell, how should we interpret the removal of the line from the statement that inflation has made progress towards the 2% goal? Is that no longer the case?
No. So let me look. If you just look at the first paragraph, we did a little bit of language cleanup there. We took out a reference to since earlier in the year as it related to the labor market, and we just chose to shorten that sentence. Again, I mean, if you look at the sort of intermeeting data, it was good, and there was another inflation reading, I guess, just before the December meeting. So we've got two good readings in a row that are consistent with 2% inflation. Again, we're not going to overinterpret two good or two bad readings, but this was not meant to send a signal. Other than this, you can take away from all of this that we remain committed to achieving our 2% inflation goal sustainably.
And just to follow up, we've seen inflation expectations across a number of measures rise sharply, which has in part been linked to tariff concerns. But there's also been this encouraging data that you mentioned in terms of CPI and rent indices. So how would you characterize concerns about upside risks to inflation across the committee, especially those tied to policies related to the Trump administration?
Well, I'd say you see expectations moving up a little bit at the short end, but not at the longer end, where it really matters. And those could be related to what you mentioned, some of the new policies. I think where the committee is very much in the mode of waiting to see what policies are enacted. We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy. We're only just beginning to see, actually are not really beginning to see much. And I think we need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be. So we're going to be watching carefully, and as we always do, this is no different than any other set of policy changes at the beginning of an administration. We'll patiently watch and understand, and kind of not be in a hurry to get to a place of understanding what our policy response should be until we see how it plays out.
Michael McKee.
Michael McKee from Bloomberg Television and Radio. You and your colleagues normally condition future policy moves with the phrase, if the economy develops as we anticipate. Is it fair to say that since there's a lot unknown about what this administration's fiscal policies are actually going to be, that you don't have a medium to long-term economic forecast that you can have confidence in? Or if that's not true, can you lay out what you think is going to happen in the economy, how you see it developing?
Well, at all times, forecasts are conditional at a minimum on just a set of expectations, and they're highly uncertain in both directions. We know that economic forecasting is really difficult beyond just a month or two out. So in the current situation, there's probably some elevated uncertainty because of significant policy shifts in those four areas that I mentioned: tariffs, immigration, fiscal policy, and regulatory policy. So there's probably some additional uncertainty, but that should be passing. We should go through that, and then we'll be back to the regular amount of uncertainty. So, what forecasters are doing, not just us, but everybody's doing, is they've got sort of just a set of assumptions about what might happen, but they're really kind of in the nature of a placeholder. And meaning, plausible could be, but honestly, you wouldn't stand behind it because you just don't know. And so you're just on hold, waiting to see what comes down. It's a very large economy, and policy is affected at the margin. But we're going to wait and see.
If I can follow up, the idea that you feel that policy is restrictive suggests that the Fed in general wants to continue to lower interest rates. So when you look at the data that you are dependent on, are you looking for data that tell you that you can cut, or data that will tell you you should hold?
We're looking. It's more the other. The way it works is, we are looking at the data to guide us in what we should do, and that's what we do. And right now, we feel like we're in a very good place. Policy's well positioned. The economy's in quite a good place, actually, as well. And what we do expect is to see further progress on inflation. And as I mentioned, as we see that, or if we were to see weakening in the labor market, that could foster. We could then be in a position of making further adjustments. But right now, we don't see that, and we see things as in a really good place for policy and for the economy. And so we feel like we don't need to be in a hurry to make any adjustments.
Howard Schneider with Reuters. Thank you very much. In 2021 at a central bank conference, you said, quote, throughout my career in both public and private sectors, I've seen that the best and most successful organizations are often the ones that have a strong and persistent commitment to diversity and inclusion. These organizations consistently attract the best talent by investing in and retaining a world-class workforce. First question is, do you still believe that? And if so, how do you intend to put that belief into practice while remaining consistent with the recent executive order prohibiting diversity and inclusion efforts?
So let me say yes in answer to your first question, but to the second question, I want to say this. We are, like others, we're reviewing the orders and the associated details as they're made available, and as has been our practice over many administrations, we are working to align our policies with the executive orders as appropriate and consistent with applicable law. And I want to add that I'm not going to have anything more specific for you today on this whole set of issues.
Well, if I could just follow up quickly on that, I'm wondering how you're getting that to be consistent with the Dodd-Frank law's stipulations about maintaining an Office of Minority and Women's Inclusion.
So I did mention consistent with applicable law, right?
Which is governing.
Elizabeth. Thanks so much. Elizabeth Schulze with ABC News. Just to follow up on Steve's question, what reassurance can you give the American public that the Fed will continue to operate independent of politics under this administration?
You know, as I've said countless times over the years, this is who we are. This is what we do. We study the data. We analyze how it will affect the outlook and the balance of risks, and we use our tools to try to, given our best understanding, our best thinking, try to achieve our goals. That's what we do. That's always what we do. Don't look for us to do anything else. And that's, you know, lots of research shows that's the best way for a central bank to operate. That'll give us the best possible chance to achieve these goals for the benefit of the American people. That's always what we're going to do, and people should have confidence in that, as I said a few minutes ago.
You've said that the Fed is in wait-and-see mode based on the policies that come out of this administration. Has the Fed started to model what policies like mass deportations, changes in immigration policy specifically, would look like for the workforce and for inflation?
So one of the things our staff does is they look at a range of possible outcomes, and they tend to go from really good to really bad, and you know, it's one of the best things that they do. And in each teal book, you can look at the 5-year-old teal books and see there are alternative simulations. So that's what they do. There'll be a baseline, and then they'll show 6 or 7 alternative scenarios, including really good ones and not so good ones. And what those do is they spark, you know, the policymakers to sort of think and understand about the uncertainties that surround this. So yes, the staff does that, and we're all well aware that the range of possibilities is always broad, and not just now, but always. And it's hard to be open to just how broad the possibilities are for an economy. You know, no one saw the pandemic coming, and it was, you know, it changed everything. So things happen, and but yes, we do that. But it's different. It's one thing to do that, to make assessments about what might happen and begin to think about what you might do in that case. But you don't act until you see much more than we see now.
Katarina.
Katarina Saraiva, Bloomberg News. You know, last month you talked about a future rate cut as being pretty, you know, significantly predicated on more progress in inflation. With the characterization of the labor market in the statement today, would you say that that's even more so the case now?
I'd say it's the same. You know, we want to see, you know, further progress on inflation, and you know, the story's there. We're just going to have to see the data. At the end of the day, it comes down to 12-month inflation, because that takes out the seasonality issues that may exist. And, you know, we're just going to need to see that. We think we see the pathway for that to happen. One example, a key example, is that you now do see owner's equivalent rent and housing services, the way it's calculated for PCE. You see that coming down pretty steadily now, and that's the place where most of the remaining gap is. In addition, a big part of the overrun, as you will know, was from non-market services, which don't tend to send much signal. So you can look through all that and think, okay, then we seem to be set up for further progress. But being seen to set up for it is one thing, having it is another. So we're going to want to see further progress on inflation. But remember, we're not, we're under 2%, but our goal is 2%, and we do mean to get back sustainably to 2%.
And in terms of the labor market, I mean, how is that broadly, you said a broad set of indicators show that it's in pretty solid place. Was there broad agreement on that? There's been a few underlying indicators that are showing perhaps some weakness, a low hiring rate, workers reporting that it's increasingly difficult to find a job. Is that of concern to the committee?
So you're right. I mean, we look at, of course, a very broad range. And so it starts with unemployment, with the unemployment rate, employment participation, wages, job quits, are people quitting, that kind of thing. the ratio of vacancies to unemployed. We look at all those things, and you put your finger though on it's a low hiring environment. So if you have a job, it's all good. But if you have to find a job, the job finding rate, the hiring rates have come down, and that's more typical of a. Let's say that the unemployment, that the labor market is at a sustainable level. It's not overheated anymore. We don't think we need it to cool off anymore. We do watch it extremely carefully. It's one of our 2 goal variables. But yeah, I'd say we watch those things quite carefully. But nonetheless, overall, look at the aggregate data in the labor market. The labor market does seem to be pretty stable and broadly in balance when you've got an unemployment rate that has been pretty stable now for a full half a year.
Edward.
Thank you. Thank you, Mr. Chairman. Edward Lawrence with Fox Business. On employment, now you said there's a broad range of possibilities, but last September you said, quote, "We understand that there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise." Now that the flow of the border has slowed and we're seeing deportations, how do you expect the unemployment rate to react?
So what's happening is that the flows across the border have decreased very significantly, and there's every reason to expect that to continue. But job creation has come down a bit too. So, if those 2 things come down together, that sort of can be a reason for the unemployment rate to stabilize. In other words, the break-even rate, as population growth slows, the break-even rate that you need in new jobs to make make jobs for workers declines as well. So that seems to be something about what's happening. You do see a very flat unemployment rate at a time when you've seen significant declines.
I want to ask you about Fed employment. I know that tax money is not used here, but Elon Musk alleges that the Fed is, quote, absurdly overstaffed. We've seen the executive branch push to reduce the federal workforce. I just want to get your reaction.
We run a very careful budget process. We're fully aware that we owe that to the public, and we believe we do that. I've got no further comment than that. Thanks.
Chris.
Chris Rugaber at Associated Press. President Trump has said he will lower inflation by reducing gas and energy costs. Do you see such costs as a particular driver of inflation, and would lowering them have a dramatic effect?
Chris, I'm not going to react or discuss anything that any elected politician might say. So I'll give you a mulligan.
Okay, well, thank you. Well, nearly 2 weeks ago, the Fed said it was withdrawing from the network for greening the financial system, even as we have significant wildfires in Los Angeles doing billions of dollars in damage. And of course, the NGFS, as you know, is a group to talk about how the financial system could address climate change. Many commentators did see the timing as political. Why did you leave that organization? Can you explain that decision?
Sure, I'd be glad to. So we considered this, really at length, and we did decide to withdraw from the NGFS. And really the reason is that the work that the NGFS does has broadened very significantly. You think about nature-related risks and biodiversity and things like that. In addition, the work of the NGFS is in significant part intended to, and this is a quote, mobilize mainstream finance to support the transition toward a sustainable economy. So we joined to get the benefit of understanding what other central banks were doing and seeing research and things like that. I think this is just way beyond any plausible mandate that you could attribute to the Fed. And so we have a quite narrow role, as I've said many times, and I think that the activities of the NGFS are not a good fit for the Fed, given our current mandate and authority. So, and I just think it was time to acknowledge that, this process dates back, thinking about it dates back a couple of years. I made the decision to bring this to the board, some months ago. The process just took time to get here, and this is when we got it and voted on it. So, and I'm aware of how it can look, but it was really not driven by politics. It was driven by kind of the disconnect between the work of the NGFS and our mandate. Other central banks have different mandates and belong to the NGFS. We have no criticism of them, but it just isn't. It's not right for the Fed.
Andrew.
Thanks. Andrew Ackerman with the Washington Post. I'm wondering if you could talk more about what further progress would look like for consumers.
2% inflation down to 2% sustainably is what we're trying to achieve. We're somewhat above that, as you know, and we want to see serial readings that suggest that we're making further progress on inflation. That's what we want to see, and consumers will pick that up, of course, in the things that they buy at the grocery store or at the store.
The other thing I wanted to ask was just how far away you think you are from neutral.
Yeah, you can't know with any precision, of course. As I like to say, that you know the neutral rate by its works. So I think at 4.3%, we're above pretty much everyone on the committee's estimates of the longer run neutral. I think our eyes are telling us that our policy is having the effects on the economy. That's really the question we ask. You can consult models, empirical models, theoretical models. You really have to just look out the window and see how your policy rate is affecting the economy. And I think we see that it's having meaningful effects in bringing inflation under control. It has helped bring the labor market into balance as well. So that's what we think. I would say we're meaningfully above it. I have no illusion that anyone knows precisely how much that is.
Yeah, we probably have about, I don't know, 10 or 15 more minutes on this, probably. These things can be a little bit on the boring side, but this is usually when the market does decide to make a move, so it's kind of important for us to see what's going on. After the conference, we'll take a quick look at the dollar pairs, take a look at gold, maybe check out some yen pairs, and then we'll go from there.
Often voluntarily comply. What is the legality there?
So it's been our practice, as I mentioned, to work to align our policies to those that are mentioned in the executive orders, and I'm just going to leave it at that. As I mentioned, I'm not going to go any deeper than that or get into any deeper into this set of issues today.
Claire.
Claire Jones from the Financial Times. Two questions, if I may, on tariffs. Well, first of all, we've seen global trade wars before, notably in 2019, last time around, but then we were in a very different place on both inflation and growth. If we see tariffs of the same sort of magnitude that we got then, which I know is big if, what do you think might be different this time around? And secondly, Tiff Macklem said there was no doubt that the threat of tariffs was a big driver of the cut by the Bank of Canada today. What sort of information would the Fed need to see on tariffs before it was willing to take such a preemptive move? Thank you.
Sorry,
what sort of information would you need to see on tariffs? Would you need to see a strategy, actual implementation, actual movement of inflation expectations before you're actually willing to change the path of monetary policy on the basis of it?
Yeah, so first of all, things are a little different now. We've just come through a high inflation period, and you can argue that both ways. You can say that companies have figured out that they do like to raise prices, but we also hear a lot from companies these days that consumers have really had it with price increases, and so I don't know how that shakes out. Nonetheless, you're coming through a situation where we're not quite back to 2%, and that's just different. In addition, the trade, the kind of footprint of trade has changed a lot as trade is now spread around. It's not as concentrated in China as it was. There was a lot more manufacturing. It moved to Mexico and other places. So there are differences, and I just think the range of possibilities is very, very wide. We just don't know, and I don't want to start speculating, as tempting as it is, because we really don't know. And we didn't know, by the way, in 2018. We didn't really know. And, the range of possibilities very, very wide. We don't know what's going to be tariffed. We don't know for how long or how much, what countries. We don't know about retaliation. We don't know how it's going to transmit through the economy to consumers. That really does remain to be seen. There are lots of places where that price increase from the tariff can show up between the manufacturer and the consumer. just so many variables. So we're just going to have to wait and see. And the best we can do is what we've done, which is study up on this and look at historical experience, read the literature, and think about the factors that might matter. And then we'll just have to see how it goes.
Courtney. Thank you. Courtney Brown from Axios. Two unrelated questions. The first is whether or not there was any discussion about QT and the timeline for ending QT at this meeting. And then the second question is just, I wonder if the AI prompted sell-off in the stock market this week signaled anything to you about the state of financial conditions?
So let's talk about runoff. So the most recent data do suggest that reserves are still abundant. Reserves remain roughly as high as they were when runoff began, and the federal funds rate has been very steady within the target range. We track a bunch of metrics, and they do tend to point to reserves being abundant. We do intend to reduce the size of our balance sheet to a level that's consistent with implementing monetary policy efficiently and effectively in our ample reserves regime. We're closely monitoring a range of indicators to assess conditions, and that should provide signals whether reserves are approaching a level that could be judged as, quote, somewhat above ample. I don't have anything to say to you about particular dates. It's just that's the process, and what we see is that rates do appear to be abundant. As always, we stand ready to take appropriate action to support that smooth transition of monetary policy, including to adjust the details of our approach for reducing the size of the balance sheet in light of economic and financial developments. On AI, it's a big event in the stock market and in particular parts of the stock market. I mean, what really matters for us is macro developments, and that means substantial changes in financial conditions that are persistent for a period of time. So I wouldn't put that label on these events, although, of course, we're all watching it with interest.
Simon.
Simon Urbanovich with The Economist. Thank you. You mentioned in your remarks that activity in the housing sector seems to have stabilized. At the same time, since your first rate cut in September, long-term mortgage rates have gone up by a full percentage point, back above 7%. I'm wondering, kind of looking forward, are you confident that activity will remain stable given how elevated mortgage rates are? How does it fit into your broader thinking about the economy?
So, as you know, as we've reduced our policy rate 100 basis points, longer rates have gone up, not because of expectations, not principally because of expectations about our policy or about inflation. It's more a term premium story. So, and it's long rates that matter for housing. So I don't think, I think these higher rates are they're probably hold back housing activity to some extent if they're persistent. We'll have to see how long they persist. So, we control an overnight rate. Generally, it propagates through the whole family of asset prices, including interest rates. But in this particular case, it's all happened at a time when, for reasons unrelated to our policy, longer rates have moved up.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said you want to see further progress on inflation. Given that households appear to be unhappy with the elevated level of prices, do you believe the committee should wait until inflation has fallen back to target to cut rates again?
No, I wouldn't say that. We've never said we need to be all the way at target to reduce rates. At any time, what we're doing is we're looking at the economy and asking whether our policy stance is the right one to achieve maximum employment and price stability. So I think if we would want to see further progress, but we think our, as I mentioned, we think that our policy stance is restrictive, meaningfully restrictive, not highly restrictive, but meaningfully restrictive. And so I would think we need to see further progress. I wouldn't say all the way back down to 2% on a sustainable basis, although we'd love to see that, of course, and we will.
And a separate question for you on tariffs. Curious whether the threat of tariffs and not knowing whether they could stick or not creates uncertainty for business here in the United States and could cause them to pull back, ultimately weighing on growth. Does the threat of tariffs cause you to ponder your growth forecast?
I want to avoid commenting even indirectly on the conduct of tariffs. It's not our job, and it's not our job to comment on the moves that people make. So I wouldn't want to criticize anything that's happening or really comment on it one way or another, praise it for that matter. It's just not our job. I do think that, we found in 2018 there was a lot of work done on trade policy uncertainty. Trade policy uncertainty, if it's large and persistent, can start to matter for businesses making investment decisions and things like that. That's not something I'm observing today. It's very early days for this, but I think that did matter in 2018-19, and it's one of many things we'll be watching.
Matt.
Thank you, Chair Powell. Matt Egan from CNN. Following up on Courtney's question from earlier about the stock market, how concerned are you, if at all, about potential asset bubble brewing in financial markets? How do relatively high market valuations factor into considerations about potentially lowering interest rates further? Is that something that's in the back of your mind?
So we look from a financial stability perspective at asset prices generally, along with things like leverage in the household sector, leverage in the banking system, funding risk for banks and things like that. But it's just one of the four things asset prices are. And yeah, I'd say they're elevated by many metrics right now. A good part of that, of course, is this thing around tech and AI. But we look at that. But we look at how resilient the households and businesses and the financial sector are to those things. So we look at that mainly from a financial stability perspective, and we think that there's a lot of resilience out there. Banks have high capital, and households are actually overall, not all households, but in the aggregate, households are in pretty good shape financially these days. So that's how we think about that. We look at overall financial conditions, and you can't just take equity prices. You've got to look at rates too, and that represents a tightening in conditions with higher rates. So overall, financial conditions are probably still somewhat accommodative, but it's a mixed bag.
Hi, Chair Powell. I'm Richard Escobedo with CBS News. One question for you. This month's statement notes that unemployment is stabilized at a low rate and that the labor market is solid. You walked through some of what's driving this, but I wonder what risks you see that might challenge your assessment.
Well, the things we discussed earlier, one is that there's a low hiring rate. And so that if there were to be a spike in layoffs, if companies were to start to reduce headcount, you would see unemployment go up pretty quickly because the hiring rate is quite low. So that's one thing we look at. I think it's worth pointing out that for lower income households, they're under significant pressure. And in the aggregate, the numbers are good, but we know that people at the lower end of the income spectrum are struggling with costs. And really, it's high inflation for the basics of life. It's not so much the inflation now, it's the price level, because inflation has raised prices. Inflation is now much closer to target, but people are really feeling that. But overall, this is a good labor market. You're at 4.1% unemployment. That's just a really good level, and you've been solidly there now for 6-7 months. And job creation is pretty close to a level that will hold the unemployment rate there, given that there'll be much slower population growth.
One more question. Some of the uncertainty around immigration policy, in your assessment, is that making it harder for businesses and the Fed to plan going forward?
We hear anecdotal reports, but I don't see there's nothing in the data yet on that. But you hear that kind of thing about construction, for example, and businesses that are dependent on immigrant labor are saying that it's suddenly gotten harder to get people. But you don't see that in the aggregate data yet. But yes, you hear it anecdotally.
Nick.
Thank you, Chair Powell. Nicholas Jasinski from Barron's. The uncertainty is certainly a theme today, and I'm wondering, are there any periods from your career or as it relates to markets, the economy, what's going on here in Washington and beyond, or from lessons from history that may provide some guidance for a central banker operating in uncertain times like today?
I guess I'd say this. Uncertainty is with us all the time. It is human nature, apparently, to underestimate how fat the tails are in a way. The possibility, we think of things in a normal distribution, and in the economy, it's not a normal distribution. The tails are very fat, meaning things can happen way out of your expectations. It's never not that way. I wouldn't, if you think about it, think about the first few months of the pandemic. That was uncertainty. Are we going to be able to reopen the economy? If so, when? How much of it? How long will it take? That was uncertainty. What we have now is a good labor market. We have the economy growing at 2 to 2.5%. Inflation's come down to now the headline inflation number was 2.6, and that's what the public experiences. We look at core because it's a better indicator of future inflation. So yes, the price level went up a lot for inflation, and people are feeling that, and they're not wrong. But so the kind of uncertainty we have is just a usual level of uncertainty about the economy, but then policies which are not for us to criticize or praise, really. Those are policies which people have been elected to implement. They're implementing them with a view to making a better economy. And so I wouldn't call this out as one of those times. I wouldn't compare it to the global financial crisis or anything like that, given that we have actually a very good economy right now.
Evan Reiser with Market News International. Chair Powell, is a March cut still on the table? And then additionally, are you looking to see better than expected data on inflation to cut? Or are you looking for inflation data that roughly aligns with current forecasts?
So, as I mentioned, the economy's strong, the labor market's solid, downside risks to the labor market appear to have abated, and we think disinflation continues on a slow and sometimes bumpy path. That tells me, and the other members of the committee, the broad sense of the committee actually is that we don't need to be in a hurry to adjust our policy stance. Your second question was?
Whether or not you need to see better than expected inflation data or just inflation data that roughly aligns with your current forecasts.
It's one of those things, we'll know it when we see it, but more the expectation is that we will make continued progress. And, that's what we want. We'll know it when we see it. It's going to have to be something that isn't just idiosyncratic. You're going to want to see, continued progress with housing services inflation. You're going to want to see inflation behaving in a way that builds confidence that we are really making progress. That's what it's going to be. And I mean, is that better than our expectations? We expect to see that. It's just a question of when.
Scott.
Hi, Chair Powell. Scott Horsley from NPR. In your 5-year review, you said the 2% inflation target won't be on the table. Can you talk a little bit about why? Is that because you think that's the right target, or is it because you don't want to move the goalpost mid-game, or what's behind that?
I think that goal has served us well over a long period of time. It's also the sort of global standard. I think that if a central bank wanted to look at changing that, you wouldn't do it at a time when you're not meeting it anyway. I would not look at changing it anyway, but I certainly wouldn't look at it at a time when you're not meeting it. I mean, there's just no interest at all in changing it, if I'm being at all unclear. We're not going to change the inflation goal anytime soon.
And 5 years ago, if I can paraphrase what y'all decided, it was you're going to not raise interest rates preemptively to head off inflation until you see sort of the whites of the eyes of inflation, because the solid labor market was so beneficial. Have the last few years changed your thinking about that?
So what we really said was that we wouldn't look at a strong labor market and raise rates unless we saw some evidence of inflation. So the thought was that we'd seen really low levels of of unemployment with no sign of inflation. So why would you preemptively want to put people out of work in the absence of any evidence that suggested that this was not a sustainable level? It was a way of acknowledging how much humility we have about the starred variables, especially U-star, the natural rate of unemployment. So that was an insight. We'll discuss that again. That'll be one of the many things that we discuss. But I don't think that insight is wrong. We didn't, we said what we said was that at times when inflation persistently undershot 2%, we would likely allow inflation to run moderately above 2% for some time. That's what we said. That turned out not to be relevant to what actually happened. There was nothing moderate about the overshoot. It was an exogenous event. It was the pandemic, and it happened. And our framework permitted us to act quite vigorously, and we did once we decided that that's what we should do. The framework had really nothing to do with the decision to. We looked at the inflation as transitory, and right up to the point where the data turned against that. And when the data turned against that in late 21, we changed our view and we raised rates a lot. And here we are at 4.1% unemployment and inflation way down. But the framework was more irrelevant than anything else. That part of it was irrelevant. The rest of the framework worked just fine as we used it, as it supported what we did to bring inflation down.
Go to Mark for the last question.
Hello, Chairman Powell. Mark Hamrick with Bankrate. As you know, in the annual report from the Financial Stability Oversight Council, among the risks outlined is cryptocurrency. Could you talk about those risks now? And regarding individuals and households, perhaps distinct from the concern about the financial system, do you worry that speculation in this unregulated asset class could hurt their financial well-being, or do you think it has a place in a household's portfolio?
So our role with Bitcoin really is to look at, with crypto, really is to look at the banks, and we think it's, banks are perfectly able to serve crypto customers as long as they understand and can manage the risks, and it's safe and sound. As a good number of our banks that we regulate and supervise do that. The threshold has been a little higher for banks engaging in crypto activities. And that's because they're so new, and we don't want to make the mistake. If you're making a choice to conduct that activity inside a bank, which is inside the federal safety net with deposit insurance, then you want to be pretty sure that it's a safe and sound activity. So, we're not against innovation, and we certainly don't want to take actions that would cause banks to terminate customers who are perfectly legal, just because of excess risk aversion may be related to regulation and supervision. So.
And with respect to households and their inclusion in that asset class?
That's kind of it's not really our bailiwick. You want people to be knowledgeable about the financial engagements that they have, and that's why we have the securities laws that we have. It's why if you read a mutual fund prospectus or individual stock prospectus, you want households to have the chance to understand the risk that they're taking. And I do think it would be helpful if there were a greater regulatory apparatus around crypto, and I think that's something Congress was working on quite a lot. We've actually spent a lot of time with members of Congress working together with them on various things, and I think that would be a very constructive thing for Congress to do. Thank you.
Okay, it's over. Is anybody still awake or what? Everybody fall asleep? Anybody still out there? It is over. Powell is done talking. Nap time is over. What happened? Man, a whole lot of nothing happened, honestly. Wow. The euro dollar has literally been sitting in the same range for 1, 2, 3, 4, 5, at least 5 hours. Man, even on the 1 minute time frame, that's a tight range. Look at that thing. Phew. Wow. So, anyways, man, honestly, my analysis is definitely not changed from today's news. I kind of think there's a good chance. Oh, let me go back to blue. On the euro dollar, I think there's a very good chance this is going to be a correction to this push down. It probably will go up and break the highs, but I would expect it to go down to one of these Fibonacci retracement levels that we have. Fibonacci retracement from the high to the low. I would expect at least an ABC correction. So, yeah, anyways, wow, yeah. We're probably going to end up drifting up throughout the Asian session, in my opinion, and then probably going back down later on. Wow, pound dollar. The pound dollar possibly could go up and make a new high because it would make sense for this to be a 1, 2, 3, 4, 5. Yeah, I know, Jimmy. Oh, man, phew, that was definitely something. So pretty much what I got from it is that they are definitely worried about inflationary measures because of the tariffs. So if Trump does, issue a bunch of tariffs, obviously it's very, very inflationary. So that does kind of make sense why they're not lowering interest rates right now, because they may actually end up having to put them back up eventually if he does implement the tariffs. That's in the short term, though. In long term, over the horizon, tariffs in the long run are probably going to be better, but short term, definitely very inflationary. So anyways, yeah, Aussie dollar, I think throughout the Asian session, they will likely drift up. Probably going to be a correction to this move down. So if you are trading a very short time frame, so you could put a Fibonacci retracement on there. Probably look for some sort of a three-way pattern up. And then just like the other dollar pairs, I would expect to probably see something like this, probably down. And possibly, like I was talking about today, before the news came out, this is possibly a wave C up here. It could possibly keep going down. Yeah, at least we had the horns and the goat, and he was smoking the cigar, so yeah. That's okay. I don't really mind holding on to trades. I mean, nothing changed for me. I'm just going to keep holding now. Sometimes when you're a swing trader and you're trying to hold through those big news events, it can take your profits away pretty quickly. So I'm kind of glad it didn't do that at least. Oh man, all these dollar pairs have a really nice 5-wave downtrend. I think likely throughout the Asian session, we're going to go up and take out these highs, which would be a correction to this push down. Put your Fibonacci retracement on there. Probably look for something like that, in my opinion. And definitely he's worried about the labor market too, which I think they're both very understandable points. If a lot of immigrants go away, then it's definitely going to be harder for people to hire, for sure. I worked in a labor union, and even though most of those people are legally here, a lot of people in the labor unions are definitely from south of the border, for sure. So, we'll see. Definitely very valid points to be worried about. Wow, US dollar Swiss did go up and break struts, so we're probably going to go down a little bit now. But I think because of the 5 waves we have here, 1, 2, 3, 4, 5, most likely we are going to go up again. I bet that's going to be like a irregular ABC right there. So up, 3 waves down, and then up. I bet that's what it's going to do, and then go down again later on. Yeah, gold, I think gold's going to go back up. I am short on gold, but it's a swing trade, and I get in over here someplace. So I think it's going to go back up, probably to at least a 60, 78%. Might even go up and make a double top. I'm still hoping that this is an ABC correction right here, though. Probably an ABC. And about the dollar yen movements, the yen was trying to move. That definitely looks impulsive up and corrective down. So I think throughout the Asian session, you'll get a push up on that, very likely. A lot of these yen pairs kind of look like they could go down a little bit more because there's 1, 2, 3, 4, 5 shape. The euro yen maybe could just keep on going up just because of the shape, but the pound yen to me definitely looks, maybe not. Kind of looks like it needs to go down, take out liquidity, and then go up. But I definitely am looking at this as a possible wave 1, possible wave 2, possible wave 3. So you might want to try to get in on that at some point. Same thing on the euro yen. Possible wave 1, possible wave 2. Maybe it does go down a little bit more, maybe not. Break structure. And then up for most likely a wave 3 of wave C. Not much on the CAD pairs. We had Canadian news today too, and they did lower interest rates, and it still didn't really do a whole lot. US Swiss, I bet that's an ABC down. These are some of the trades that I'm still holding. I'm short the Aussie CAD, short the Aussie Swiss, from up here someplace, so not too worried about that. And I'm short the stock market, which the Republicans are very bullish the stock market, so we'll see. Honestly, the stock market is kind of a buy-only strategy, you know, wait for a good dip and then buy the dip. So you got to be careful shorting the stock market for sure. But overall, pretty slow. Very, very, very slow news event so far. So what do we got for tomorrow? Let's check in the news calendar real quick. Yeah, I think wave C and then down is probably the most likely thing to happen on that. What do we got tomorrow? Oh, we have, tomorrow we got interest rate, right? Yeah. We got interest rate for the euro tomorrow, which they plan on lowering interest rates also. 25 basis points. So tomorrow, New York session, which I'll be in a live Zoom meeting at the time of this news right here with my members. We have the euro interest rate news tomorrow. And if anybody is interested in signing up for my website, you get access to all the benefits listed down here below for only $30 a month by signing up at my website, fxpipcollector.com. If you have not done so already, definitely join my free Discord channel, though. It is 100% free to join. I never will ask you to buy anything from there. If anybody does ask you to buy anything, then they are definitely 100% a scammer. So, yeah, not a whole lot going on. I think we'll probably drift up throughout the Asian session. Probably drift down a little bit on the dollar CAD and the dollar Swiss throughout the Asian session. Gold, probably going to drift up, grab a higher fib level, and then probably down again. Pretty underwhelming. Well, maybe tomorrow Trump will tweet something that'll get the markets cranking. So yeah, anyways, well, I have to start doing these live streams more often. I mean, I do enjoy them because I get to look at pairs with everybody that I don't normally look at. I do cover every single thing on this list every single day for my Zoom meetings, my premium members, but otherwise, I pretty much just analyze the same pairs every single day because those are the only pairs that really get any views. So anyways, definitely join my Discord channel. It is 100% free to join. And if you would like to check out my website to get access to all the benefits, including all my trade setups, swing trade setups, all my daily members forecast, or if you want to sign up for the alerts that get sent right to your cell phone, that is also a subscription that you can possibly get by signing up at my website, fxpipcollector.com. So anyways, I hope everybody enjoys the rest of their evening, and as always, thank you and happy trading to everyone.